Imagine a Layer Zero network that spent 18 months in a coma while spec money chased shinier toys. Now picture that same chain ringing the bell at Amsterdam Stock Exchange, flashing a record-high decentralization score, and catching a Bloomberg nod for a spot ETF with 75% odds this year. That's Polkadot. While price drifts at $3.80, the on-chain data, the governance upgrades, even the gaming user count are exploding beneath the surface. Tonight, we're diving into the charts, the volume cliffs, and 4 take-profit zones that could turn a sleepy range into a triple-digit rally. Buckle up. By the end, you'll know whether Polkadot is bargain bin junk or the most asymmetric trade of 2025. Scroll Twitter and you'll see snark about Polkadot being yesterday's multi-chain. Yet, the very boredom is the setup. Range traders have quietly harvested this blue channel painted on screen since late 2020, buying fear at the lower rail and unloading hope at the upper. The weekly candles you're seeing now, they're dancing right on that bargain rail again, with volume profile bars showing a hollow belly of bids directly overhead. Markets love to revisit high liquidity ledges. When they do, they often rip through them in one thrust. Polkadot doesn't need hype. It needs patience. And patience is exactly what undervalued coins reward every cycle. Look left. Those pink and blue bars are the VRVP, where people actually traded, not just tweeted. Notice how liquidity disappears above $7.50? That void is an elevator shaft. Once price claws through the first Fibonacci retrace at 540, there's precious little supply to cap the move until 750, the 0.5 level. Thin air is a trader's best friend. Shorts can't anchor, longs feel invincible. Last cycle, Polkadot sprinted $12 in 5 weekly candles under similar conditions. History doesn't repeat, but liquidity imbalances rhyme. And right now the rhyme is bullish. On screen you're seeing a chart with a crimson skyscraper of decentralization. A Nakamoto coefficient of 177, triple Ethereum's dwarfing Solanas. 600 active validators, 1.4 million DAO members, and distribution across 4 continents. Translation: shutting down Polkadot would require disabling more nodes than most proof-of-stake chains even run. That resilience isn't sexy in a bull feed, but when regulators aim their scopes, decentralization becomes priceless. Markets price risk. The higher the resilience, the richer the premium investors eventually pay. Gonza's tweet remembered us. A Bloomberg analyst table crowning Polkadot with a 75% chance of spot ETF approval in 2025. Why does that matter when ETFs exist for everything from gold to soybeans? Because U.S. regulatory blessing pours institutional liquidity into previously untouchable assets. Grayscale and 21 shares have already filed. The SEC clock is ticking. The moment a Form 19b4 flips from acknowledged to approved, price discovery jumps exchanges and lands in prime broker dashboards. We've watched this movie with Bitcoin. Polkadot's float is smaller. The effect could amplify. Now playing. The Amsterdam Stock Exchange ceremony photo. Polkadot didn't just buy ad space. It became the first blockchain company to list in Europe's financial heart. Compliance hoops? Cleared. Institutional due diligence? Passed. This is what grown-up crypto adoption looks like. Quiet, regulated, permanent. When legacy markets acknowledge Web3 infrastructure as fair game, they unlock pension funds and insurers that were previously barred from touching tokens. Polkadot just got stamped tradable by Europe's old money gatekeepers. Flip to ZWeb3 ecosystem metrics. Mythos now owns almost half of daily active accounts on Polkadot, fueled by FIFA rivals hitting the App Store. Web3 gaming headlines might scream dead, yet users vote otherwise. 10,000 daily accounts is still small next to Fortnite, but every extra wallet means transactions, staking, and fee burns that squeeze supply. In crypto, user graphs often lead price by months. Remember Axie Infinity in 2021? Same energy, only this time on a chain built for modular parachains. Check the Nova Wallet screenshot. Debit card integration, in-app governance, 90-plus networks, and one-tap Polkadot staking. Usability has long been Polkadot's Achilles heel. Nova's upgrade stitches that wound. Governance, voting from your phone, that turns passive holders into active citizens, and active citizens don't sell cheap. Better UX retains users, retains total value locked, and ultimately retains the narrative. Watching Mr. Schiff's clip, EnergyWeb CEO Ed Hesse lays it bare. They chose Polkadot for 3 reasons: governance freedom, cheap fees, and the ability to own their execution layer. While competitors brag transactions per second, Polkadot sells sovereignty. For enterprises, that's gold. As real-world asset protocols hunt compliant rails, Polkadot's on-chain democracy becomes a moat. Markets may overlook that today, enterprises won't tomorrow. Zoom into King Baldwin's post, a proposal to swap 500,000 DOT into TBTC over 12 months using Hydration's rolling DCA. Diversifying the Treasury signals 2 things: confidence in long-term token value and pragmatism about macro cycles. Critics call it dilution. Supporters see a volatility hedge that could bankroll ecosystem incentives when markets sour. Either way, governance is alive, transparent, and experimenting exactly what decentralized finance should do. Leon Wademan's bar chart ranks Polkadot 5th with 367 active devs. Sure, Ethereum leads, Solana follows, but momentum matters more than raw count. We're midway through Polkadot 2.0 elastic scaling. Substrate kits keep shipping, and devs chase grants where Treasury coffers overflow. Remember, every flagship DeFi app on Ethereum once started with fewer than 50 GitHub contributors. Back to the weekly chart. Current price hovers at $3.80. The range floor kissed 4 times since 2022. The first target sits at the 618 fib, $8.40. I'm penciling 30% profit there. Target 2 aligns with the channel upper resistance at 1150, another 30% offload. Target 3? The 1618 extension near $16.50. Take 20%. Last chips ride into the 2618 at $24. Moonshot territory, but structurally possible should ETF news break. Risk management? Weekly close under $3.10 invalidates the setup. I don't marry bags, I date them. This isn't a hodl till retirement thesis. It's a swing to trend plan with mechanical exits. If you watched our last Polkadot breakdown, today's play rhymes, only the stakes are bigger. Whether the ETF rubber stamps or the channel finally fractures north, Polkadot offers one of crypto's cleanest risk-to-reward charts right now. Destroy the like button if you learn something, slam subscribe so you don't miss the follow-up when the first target pings, and drop a comment. Is Polkadot the most underrated layer 0, or is the market right to snooze? By the way, if today's deep dive sparked your curiosity about earning passive yield without staring at charts all day, check out my ebook DeFi, Financial Freedom, the Ultimate Beginner's Guide. For just $4.99, roughly a regular coffee, you'll get a clear roadmap to staking, liquidity mining, and airdrop hunting across the biggest DeFi networks, plus the safety checklists I use to dodge rug pulls and smart contract traps. The link is pinned in the top comment. Grab your copy, start compounding in the background. The end screen is cueing our earlier Polkadot deep dive. Watch that next to see how this story started. And I'll see you tomorrow in the next video.